The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
So for more on all of that and another perspective on what's going on in the crypto markets, Michele Schneider joins us this morning. She is the Managing Director of the MarketGauge Group. Welcome, Michele.
Hi, thank you so much. It's great to be here.
It's great to have you. So the wider investing world is focused on inflation, central banks, the outlook, for, as Lawrence was just talking about, for the economy broadly, and bond markets seem to be sort of bouncing around in the midst of all of that. How is that impacting Bitcoin?
Well, I think when you get into a general liquidity headset from people, investors in general, it really just goes to show you that nothing can be safe in that type of environment. Bitcoin has been classically considered some kind of a hedge against inflation, but even inflation fears have subsided. Whether or not that's legitimate remains to be seen. I myself am skeptical about that. But nonetheless, between the release of all of the shares that are coming out from GDPC in July, investors that can sell 40,000 shares, that may have been causing some selling ahead of what they think might be some selling. I think overall, the whole environment right now, which has really been risk on with neutral gauges throughout the whole market in terms of bias, risk on, risk off, right smack dab in the middle. Obviously, we'll see a flip to bearish, and I think that's really basically impacting everything right now.
Yeah, Michele, I was going to ask you, the global markets, particularly in the equities, it seems like there's some sort of hesitation and some sort of like, okay, you know what, we went up significantly. Now, wait, maybe things aren't as great as we thought. Is that really bleeding into crypto enough that it would cause this sort of sell-off and maybe testing lower bounds on Bitcoin again? And actually, while we're at it, what would be the better vehicle to be in such a situation? Would it be Bitcoin or Ether?
Well, Ethereum has definitely taken over a bit over the last several days, although I think this morning that's coming in even lower percentage-wise than Bitcoin. But I think I don't look at them necessarily. I do look at them separately, and there have been moments like we just saw recently where Ethereum starts to outperform Bitcoin and then it goes in reverse. But I think you really have to look at it at the general space right now. And right now, it looks to me more like range bound than anything else, with relatively low volatility. So I'm not ready to give it up at this point. We still need to see Bitcoin hold 30,000, and we still need to see Ethereum hold 2,000. The fact that it cleared over 2250 and couldn't go much further was a little bit concerning. But really, we're talking 2,000 to 2,500. I think you have to broaden your range here. And the same thing with crypto. You have to, Bitcoin, you have to look at 30,000 to 36,000 before we can really make a determination. And it is interesting how much bad news the market has absorbed, especially in Bitcoin, considering the China mining ban, et cetera, et cetera. But there's still a lot of good news out there. So I think it just needs a little bit of patience here to find a footing. And like I said, with these GBTC shares coming on the market, there is some fear that the people that have been holding that for 6 months that can finally be unlocked might actually become sellers. So I would just say patience all around right now. We personally have not made a trade for our accounts in our discretionary service since June 24th. This might be the longest period of time we've gone without making a trade. And it was because
trading crypto or trade in equities?
In anything. We haven't done anything. Wow. Right. And that's for us is unusual, highly unusual. And it's because we started to see things like movement into the long bonds, which generally means, and there's a thing that bond traders are the smartest traders in the world. And maybe this time we can certainly say that, because when we started to see money going into the TLTs, what that was signaling, at least to us early on, even with NASDAQ going to new highs, was that not everything, something rotten in Denmark, to borrow a line from Shakespeare.
Michele, you say you haven't made a trade. What exactly are you waiting for? What kind of signal are you waiting for to change that stance?
Well, what I really look at is the small cap the Russell 2000, I look at the retail sector, and I look at the transportation sector. Not only those, but those are the three things that I look at. And what made me not get bearish, even though they have been declining in price, is that I also look at what the Fed is doing, and regardless of what they were saying, there's still been bond buying coming in through, let's say, the junk bonds, which are the high corporate debt, high yield bonds. And so that was giving me a mixed message. NASDAQ, forget that. Growth stocks are always the last to find out that things may not be so roseate. And that's what really kept me on the sidelines here is who's right? Is it the Fed really going to be able to hold this market up with the bond buying, regardless of the taper tantrum that they've created? Is it the industrials, manufacturings, financial, and retail telling us that growth is definitely nowhere near what they projected after the back to normal? Is the growth stocks telling us that this is going to be, everything is going to follow along with the large cap growth stocks? And that was questions that kept plaguing my head every time I was about to press the button and put in a lot of other people's money on the line. I said, nah, let's just be patient. So right now, what am I waiting for? Well, if the reconciliation is to the downside, I might be looking at some protection like through VIX or something, but otherwise I might just sit this out. And also even inflation right now. I still think we're going to have inflation. I don't see anything that's really changed. But at this point, all of the commodity prices have come off. Go ahead. Sorry.
So along the lines of inflation, I mean, if the Fed starts tapering, particularly when it comes to buying real estate debt, which was it's a big player in the real estate markets right now, whether, the mortgage-backed securities, what happens then? Would that basically cool off this worry about inflation because it would basically cool off the housing market in that way and sort of kill two birds with one stone?
Well, again, we have to look at inflation as where is inflation coming from? Housing was certainly the lead indicator to an inflationary environment that we've seen over the last year. But there's also other factors. Food-driven inflation was what we were most concerned about. Now, there was some good news in that the prices of food globally actually went down for the first time in over a year. But whether or not that's sustainable, we'll see. I think we have to look beyond the housing market, and we still have to look at the supply chain issues, which still exist, the low labor to get things moving, which still exists. And even though we're coming back slowly globally from COVID, now with Japan doing a state of emergency and still a problem with the variant, that global demand hasn't really hit the market yet. So we have to really watch what happens here with supply of raw material in general. The housing market, generally what happens is that it does sort of even out. It's usually ephemeral. What happens with, all of a sudden everybody's buying houses and there's no supply. Then everybody puts their house on the market. The prices go up. What's really helping the housing market right now is interest rates. That would be the final thing to look at. And I don't think the Fed's going to move the interest rates any. So that's why I'm still looking at the inflation potential. There's still going to be money flowing into the system.